Sweet. Well, welcome everyone. Thanks a lot for joining us today. We're really excited to have Nick from the Base Protocol team joining us today. Really want to thank the Base Protocol community, the Chainlink community, everyone in DeFi for joining us. I know a lot of people are really excited for this one. I am myself as well. So excited to learn more about Base Protocol, kind of your plans for the future going forward, and a little bit more about your team and everything that you guys are working on. The goal of this Q&A, is to let everyone know a little bit more about Base Protocol, or the integration with Chainlink, how we've been working together, and what makes this integration unique and beneficial for both the teams. The agenda is going to be about 20-30 minutes of Q&A. If you have questions throughout, definitely drop them into the YouTube chat. We'll try our best to get to them. If we don't, definitely come into both of our Telegrams afterwards, and happy to answer any further questions. So without further ado, Nick, thanks a lot for joining.
Yeah, I'm super excited to be here. This one's been a long time in the running. I've been talking to Keenan for a good little while, and excited to finally have this, I guess, public conversation with Chainlink. We've talked with each other so much privately, and now we kind of get to talk about, Base Protocol, the Oracle integration, and where Chainlink and Base kind of meet. Excited.
Cool. Yeah, so I guess to get started, do you want to maybe just give an introduction about yourself and what Base Protocol is?
Yeah, I'm Nick. I'm basically, we're kind of a foundation. We don't do a lot of the sort of C-suite titles and stuff. I'm a Base Protocol co-founder. I'm pretty much the storyteller. I've done, our website, white paper, interviews like this. I like to keep in touch with the community. A lot of our social media stuff, that's usually me. I've been kind of active in the blockchain space since 2015, founded my first project in 2017. Prior to that, always just been kind of a founder in different startups. A lot of the times tech startups. Had an IoT thing I did for a while. Again, first crypto project in 2017. And then that was actually with my co-founder, Dylan. And we've been kind of just keeping an eye on the space since then. We saw all the crazy stuff that was going on in DeFi. And for for those of you who are familiar with Ampleforth, we kind of saw this whole rebase movement and the innovation there, and started thinking about different applications for that, and then came up with Base Protocol, and here we are today. But yeah, that's me. I like to call myself the storyteller for Base Protocol.
Right on. Cool. Yeah, very, very exciting. You want to maybe touch on how that experience at your first crypto startup has kind of helped you with this and make this very successful?
Yeah, tremendously. I mean, the first time that we really built out a project, no one teaches you how to run a crypto startup in school. You kind of just learn as you go. And so it is extremely beneficial that, it isn't our first rodeo. We've done this before. We've, managed communities before, done the fundraising before, and kind of built all those partnerships. It's something we've been around the block for. The most important thing, really, experience that I took from my last project and that we really get to bring here is vetting talent, particularly as it is relevant to development and programmers, because being someone who's not a programmer, it's really easy for you to, I guess, end up spending money that you maybe shouldn't on some sort of the wrong things. And in this situation, we've got a really, really strong core dev team that's just actually partnered in the foundation, that's been doing a really good job for us in terms of all that hiring and everything. So I could really go on and on about all the things that we learned kind of in our first go around that we've been able to really apply to our experience here. But no, it's been awesome. I think I wouldn't have it any other way than for us to be doing Base Protocol, to have had that experience, than to just be coming in, fresh out the gates. This is all kind of our first time around, but no, it's been really beneficial that we've got that sort of experience, and also a lot of the connections that we made, sort of that first time around.
So Base Protocol, like the first week was insane. Definitely was following it, and we were kind of chatting along through it, and yeah, it's crazy to see the community growth, and even on this video right now, tons of people. So yeah, thanks again for everyone who's joining in, and the community you built around this is really fascinating. And I think like one of the reasons for this is you have a really unique spin on everything, and indexing this to the total market cap. Do you want to kind of talk about how Base Protocol is unique compared to other rebase protocols, and kind of your vision for it?
Yeah, definitely. So for those of you who are familiar with rebasing, you're probably familiar with Ampleforth, who, we respect as kind of the pioneer in this space, as they were sort of the first rebasing token. And it was a token whose price was pegged to, or whose price is pegged to United States CPI. In other words, kind of making it an inflation adjusted dollar, just an elastic supply money whose price will always float at around $1. And that's a really cool use case. And ever since then, you've seen a lot of other rebase tokens create these price pegs on different kind of assets. Some of those have been interesting and some of those not so interesting. And we were kind of thinking about, what would be the really cool use case for rebasing. And what we sort of started to think about was, what if you could make a token whose price was pegged to the total market cap of all cryptocurrencies, and that token might then act as sort of like an index, kind of like an S&P 500, but for crypto. And we thought the idea was really cool. And so we then just started, talking to people, asking around, friends, family, and then obviously different people that we know in crypto, and saying, what do you think of this? Like, what are the holes here? Does this make sense to you? And across the board, everyone was like, yeah, that seems like a really great idea and is surprisingly a simple one. And so we just kept talking to people. And as we were doing that sort of customer research and just getting this overwhelmingly positive feedback, that was it. We started putting all of our documentation together, getting to work on the development, and here we are today.
Very cool. Yeah, I know even for myself too at times, and other people, like when you're kind of getting into this whole rebasing, in your own words, what is rebase, and how do you explain this to someone that's new and that might be listening in right now?
Yeah, let's definitely talk about that. So guys, the whole purpose of a rebase token is to peg the price of the token to something. Let's just say that that's $1. You have a token and its whole point is to be pegged to $1. At all times, its price must trade at $1. And let's say that it is trading at $1. You have one token and it's trading at $1. But then people start to buy that token up. So now your one token is trading at $2. So now the price peg has been disrupted. It's no longer trading at $1. So something needs to be done to correct this. What a rebase protocol does is it'll basically change supply to affect scarcity to then bring the price down to the peg. So you have one token that's now $2 and it should be $1. So what a rebase protocol is going to do is it's going to then adjust supply. So now instead of having one token at $2, you're going to have two tokens, each valued at $1. This is how it drives price back to the peg, is by changing supply proportionate to the disruption in the price peg. So it essentially is affecting scarcity so that price comes back to its target peg. That's all a rebase token is, kind of from a big picture perspective.
Yeah, I think that's a really good explanation. And the economic theory around these, it's really fascinating and exciting to see. And I think that's like, with Base protocol, this peg is actually for the total crypto market cap. Really kind of changes everything too, and adds another use case on top of it. So yeah.
So for that example, it's I like to think it's the simplest example for me to kind of like explain what rebasing is. But if you really want to start thinking about Base protocol, and hopefully we'll make this simpler as we go over things, instead of pegging to $1, imagine it was pegged to the total market cap of all cryptocurrencies. So then by holding that token, you're holding a token whose price tracks the performance of the entire crypto industry. And just to make one thing kind of clear for people before we move on, Base price is pegged to the total market cap of all cryptocurrencies at a ratio of 1 to 1 trillion. So if the total market cap of cryptocurrencies is 450 billion, Base price is 45 cents. If the total crypto market cap is 800 billion, Base price is 80 cents. If it's 1 trillion, base price is $1, and so forth.
Got it. Yeah, very, very innovative. So I think a lot of people are curious, so how does Base Protocol use Chainlink's decentralized local network?
Yeah, absolutely. So as I explained, base price is pegged to the total crypto market cap. And as you start to talk about this idea, before it's been built out, the biggest question you're going to ask is, where do you get that crypto market cap? Where is that data coming from? And, as we were thinking about it, like just in the infant stages, you kind of start to think, okay, you grab it from coin market cap, but then there's a lot of problems there, which is one, that what coin market cap says, crypto market cap is versus what CoinGecko says versus Nomics versus TradingView. They're all giving you different numbers with a decent degree of variance. So that's problem number one. Problem number two is the single point of failure risk. If you take data from just one source, who knows what could happen with coin market cap or CoinGecko on any day, what kind of compromise there might be, what kind of spoof there might be that would completely undermine the entire, rebase of base. And so as we were kind of thinking through that, we knew that we'd have to be sourcing data from, multiple sources. And that's actually where we built our own Chainlink Oracle for tracking this, crypto market cap. And we didn't have any like node operators outside of ourselves on that Oracle. It was just sort of a proof of concept as we were kind of building this thing out. And, we really wanted to build it with Chainlink because Chainlink had enough good documentation for us to do that independently. And as we had that proof of concept set up, we were able to actually run it on testnet and everything. We started to feel confident that, okay, this is something that does make sense. We're able to reliably source that data in a way that's decentralized and resilient. And that was really a step that we needed to kind of keep moving forward. And as we did, eventually we got in contact with Chainlink, and, you guys were really excited with what we did. Noticed that you didn't have an Oracle yet set up for total market cap. And that's where we kind of worked together, and Base Protocol is now the sponsor for this awesome, market cap USD price feed that I'd love to show you guys real quick.
Yeah. Here, let me, we should definitely show that. You should be able to share the screen now.
Yeah, I can share now. And yeah, this is it. There's, whenever we first built it, there were 7 nodes. And now, I just did the AMA with China 2 days ago, and she did a quiz with everyone and was like, how many node operators are there? And she asked me, and I said 7, and everyone was saying 9. And I was like, that's just how decentralized Chainlink is. They've added 2 since the last time I talked. But yeah, so here you guys can see different operators, and then here we have 567 billion, and this is where we're sourcing our crypto market cap data. Here we like to tell everyone that we are powered by Chainlink, and it's that crypto market cap data, that 567 billion, that then determines what the target price for Base is, which at the moment is 56.7 cents. Base is currently trading at 56 cents, which means that, it's performing well in terms of the price peg stability. And what that means, because there might be a slight discrepancy there, is that for this 56 cents to come up to 56.7 cents, there's going to have to be a small rebase where a small amount of tokens are actually destroyed to increase scarcity, which is what brings this target price, or this market price, up to this target price. But anyway, that is how we use Chainlink, or how we're using that Oracle. It's pretty much a pure, our token is pretty much a pure expression of the Chainlink Oracle itself.
Got it. Yeah, I think that's what's so innovative about your team, and what's been so great working with you guys, like going and creating this Oracle yourself. And I don't think a lot of people realize this. Chainlink is a framework for decentralized oracles. So if there's something that you want to, get an Oracle for, and you want to use Chainlink, and you might not see it on that feeds page, the documentation's there. So you can go and be able to create an Oracle yourself, come talk to us at the team, and, we can help you get some node operators on there feeding data and continue to decentralize it and get more and more on there. but yeah, fascinating what you have done. And yeah, it's been really cool to watch the progress and the story continue. To kind of continue on that, what was that process like, going through that documentation and kind of building this? Who's like kind of the developer on like the back end of things, and how did you kind of go about it?
Yeah, so that's Chris. And, Chris, the way he described it to us was that it was sort of the only way for us to go in terms of building this out, because we really wanted a functional product out of the gates, and one that worked, again, resiliently and in as decentralized a way as possible. So we wanted to make sure that before launching this token, that there was going to be an oracle for the crypto market cap data. And as we were looking around at different oracle providers, it was just pretty clear that Chainlink kind of had the most resources for us to sort of do that independently. And so it's kind of funny, ever since then, Chris has described it as, honestly, a pretty simple process. Since then, he actually has on his YouTube channel made a video on how to deploy a Chainlink node with Docker. Here, let me just go ahead and share. Actually, I won't even share the screen. You guys can just go ahead and look up Learn with Coffee or Dev Coffee. That's our head developer, Chris Pena. That's his YouTube channel. And he's got a cool 20-minute, YouTube video. It's a blockchain tutorial just on how to deploy a Chainlink node, because he thought it was cool that it was something that we could do sort of on our own, again, as proof of concept. And so he kind of wanted to help contribute to that ecosystem. But no, from what he's told me, it was super simple.
Yeah, that was a great video too, and I'll make sure to drop that into the link after. I know we shared it in Discord. I think we've retweeted it as well. But yeah, if you're interested in running a node, definitely jump on there and take a look at that. And yeah, very, very helpful. Cool. Kind of taking a step back to like, where do you see DeFi right now? You've been in the space for a while. Where do you see it kind of going now that we're in 2020? Where do you see what's going to be the big things in 2021?
Yeah, I think that, it might sound kind of fluffy, but my big answer is DeFi really started with a lot of these like true value add projects. To me, I think that the biggest champion for DeFi was sort of Uniswap, which is basically saying, if we break DeFi down, it's simple. It's decentralized finance. So let's first talk about like what finance means. I think that the definition of finance, like loosely, is the management of money by like an institution or government. So anytime that you have your money managed in any capacity, whether that's through like an investment or in a bank, it's all what we call finance, which has traditionally been centralized. And now what we're seeing is decentralized finance. In other words, the decentralized management or administration of your capital. And so in a traditional bank, right, the most basic form of finance, you have money, you store it with your bank, and then they put that money to work, either through loans or by facilitating transactions. And they then return to you a yield because you gave them your capital. And those yields are usually super tiny, because they've got a bunch of fees that they've got to pay out and a bunch of CEOs who have to get paid, and the whole slew of expenses that go along with any centralized process. But what we're seeing now with something like Uniswap, for example, you get to put your funds to work by providing liquidity on the Uniswap exchange. And in doing that, you're getting a percentage of all the transactions that occur with the money that you've contributed in fees. And the kind of yields, the returns that people were making, were just completely blowing it out of the water as compared to, just putting your money up in a bank. The interest rates, the yields that people were making were incredible. And so that got a little bit out of hand after a while. It was cool at first. We were starting to see how this could really disrupt things, and Uniswap was creating real value. But then, as all the attention came, we had a lot of, I guess, things got interesting there. There were the money games, there were the food tokens, the projects that were really out to maximize your APYs. and people were having a lot of fun with it, but it wasn't very sustainable. And it did eventually kind of lead to a crash, which left a bad taste in a lot of people's mouths. And so if you had asked me this question, I think in around around late September, middle October, things were looking kind of grim. People were, again, had a bad taste in their mouth about DeFi. And to me, that was just irrational. It was like, look, there was some, funny stuff that happened in this first chapter of DeFi, but don't ignore the real value that's being created by Uniswap, Compound, Aave, and how like Chainlink even is contributing with, all of the decentralized price feeds. Don't ignore that. That stuff's really important. DeFi really is kind of a low-hanging fruit for blockchain that's really going to create real world disruption. And I think that, now we're kind of correcting our sentiment on DeFi, and we're starting to see those real value projects reemerge. And so basically all I'd say is, look for the projects that are really taking those traditionally centralized, processes of finance and really creating value through decentralizing them. That's what DeFi is. And in the case of Base Protocol, the idea, what we're really trying to go for here is to decentralize the ETF, right? Typically, how Base would work is it would be a tradable, like I sometimes say, the S&P 500 of crypto. But if that's really what it was, if it was something that you had to buy and then, with some central entity and then trade on exchanges, there's a number of things that you'd have to go through. One, the fund manager would have to buy all these cryptocurrencies, take on all these custodial fees and pass them on to the user themselves. That user would have to KYC. There's a ton of legal restrictions around it currently, and it's just kind of a huge mess. But with Base as a rebase token, we're able to basically create that ETF in a decentralized way that kind of cuts through all those processes. So anyway, to answer your question, I just say DeFi is definitely here to stay. There's a lot of really cool stuff happening, and for people to just look at those projects that are creating real value and watch their growth.
Yeah, I think that is very well said. With Base Protocol, what's next on your product roadmap, and where do you see yourself going for the rest of this year and into early 2021? You focus on?
There's a lot. I'm sure a lot of people who are watching this are aware that, we made quite a splash into the market these first few days, and that's been really beneficial in many ways. You've got a lot of exposure, a lot of eyes on us, and a lot of different projects now reaching out for partnerships, and projects who are now more receptive to us reaching out for partnerships. And so over these last few days, it's just been really all over the place. I mean, I couldn't sit here and list to you every partnership that we've announced this last week and all the other ones that we've got kind of pending. But it's really a lot of integrations. Right now, we're trying to, make sure that we do all this stuff in a timely fashion over this next month. All these different, staking platforms and lending platforms that are interested in having Base offered. We're really focused on that right now. And then the next big thing that, I'd really like to make sure our community is keen on is that we're going to be working on the Cascade 2.0. So the Base Cascade is basically our incentives program for people who provide liquidity on Uniswap. So if you provide Base ETH liquidity on Uniswap, you'll be given a Uniswap LP token that you can then stake in the Base Cascade, which is just going to give you Base rewards because you are providing Base liquidity. It's really all it is. And we just really want to make sure that cascade is as, perfectly operable as possible and as pretty and user-friendly as possible. So we've got some updates coming there that are going to be really important for us. But yeah, it's just some minor tweaks. We'll be doing a little revamp of the website and the overall dashboard and everything, but that's nothing too huge. It's really just making sure that Cascade is doing exactly what we want it to, how we want it to, and that the community loves it and is having fun with it. And then making sure that we're really pursuing those partnerships and integrations that we've had a lot of interest in.
Cool. Yeah, sounds very exciting. With some of those, I'm glad you brought that up too. Like, how do you see Base fit within lending protocols, and like kind of what's your argument for a Rebase token, being used as collateral on a lending DeFi application?
Yeah, I would love to talk about that. It's one of my favorite things to talk about. So I guess, I'm going to sort of loosely read off this because it's my most effective way of kind of explaining it, but promise I'm not just reading. As you guys know, Base is a token whose price is pegged to the overall crypto market cap, which means that it basically tracks the performance of the crypto industry. That's what Base is. So DeFi lending platforms like Aave and Compound have made it easier than ever to borrow crypto. And many users are borrowing crypto on these platforms specifically to trade other cryptos. However, borrowing volatile crypto assets can be counterproductive to any loan. Many don't want exposure to the price action of the underlying asset. So for example, Keenan, if I loaned you a Bitcoin and you wanted to go buy a car and you had to pay me back a Bitcoin a year from now, you might be on the hook for way more than you wanted to be on the hook for, right? So borrowing volatile crypto assets can be problematic. For this reason, traders typically borrow stable coins to reduce that volatility exposure. Makes sense. But what if the price action of the underlying asset could be used productively? Base, an asset that gives exposure to total crypto market performance, can be very useful as a lending instrument for crypto traders. Here's how. Imagine, Keenan, you borrow 1,000 Base and you buy an altcoin with it. Then crypto markets fall 30% and your altcoin falls 50%. Now it's time for you to return Base. So you have to sell your altcoin, buy Base, and return it back to me, the lender. But you notice that when you do that, the Base is now 30% cheaper than when you borrowed it because it tracked the market. So even though your altcoin fell 50%, you were only exposed to a 20% loss, which is the loss you took that was in excess of market performance. So your token, the altcoin that you bought, went down 50%, but the Base that you borrowed also went down 30%. So you're only exposed to a 20% loss. So it's basically a hedge for trading crypto on leverage. And it kind of can help protect you as a borrower against the erratic market movements that can happen. So basically, to sum it up, Base can be a valuable alternative to stablecoins, which leave borrowers fully exposed to the volatility of their crypto investments. It can just be kind of a cool tool to use as a hedge, as you're trading your more aggressive strategies on leverage. Does that make sense?
Yeah, that makes a lot of sense. Yeah, I think that's a really good explanation. And yeah, fascinating. So really excited to see how that continues over the next few months.
Yeah, and it's the thing that's most interesting about it, and that I really, want to see our community explore, is that it opens your mind up to the different kind of second layer financial products that can be built on a token that tracks the total crypto industry. This isn't the only one. We've thought about a few different things, but want to make sure that we've got all of our ducks in a row before we go make an announcement and try and pursue partnerships. But it's something we really want everybody to explore. We want to see where your imaginations go with what, Base really can be.
Very cool. Yeah, really exciting. Sweet. Well, yeah, again, everyone, I really appreciate everyone tuning in for this. I hope we all learned something. I know I did. Nick, where is the best place for, to communicate with the team and to follow your progress?
Yeah, I would say, to join our Telegram, and definitely follow us on Twitter at Base Protocol. That's all it is. There you're going to see all of our upcoming events, AMAs, Q&As, every single partnership announcement as it happens. Our Twitter is really blown up. It's been super awesome. The activity there is through the roof. And then definitely join our Telegram. If you join our Base Protocol Telegram, which you can find on our website, feel free to DM any of us as admins and ask the community any questions that you might have. They're really engaged, really intelligent, know a lot about rebasing and the whole process behind it, so they can get you kind of up to pace on stuff. Our website is baseprotocol.org, and that's where you'll find all those socials, just up top at the nav bar.
Cool. Yeah, well, I really appreciate you sharing that. And I'll make sure to drop all those links for everyone who might not know them or wrote those down in the description afterwards. Otherwise, Nick, yeah, thanks again for joining. This was a fascinating talk, and yeah, really, really enjoyed it.
Yeah, Kenyon, it was awesome to be here. Thank you for having us.
Cool. Well, that wraps up our video Q&A for today. Hope everyone enjoyed it. Thanks a lot for joining. I know there's a lot of people, so really excited for that. Otherwise, have a good rest of your week, and we'll see you next time.
Awesome.
Thanks.